Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be talking about Exxon Mobil stock and their recent dividend increase and why I actually sold most of my shares of Exxon Mobil, and why basically my reasoning for that, and kind of what I think of Exxon Mobil going forward into the next 5 or 10 years. So first we're just going to look at that dividend increase. So we're here on Seeking Alpha looking at the dividend payout history. So if we really go back to 2019 here, back actually in 2018 they were paying 82 cents per share per quarter, and then in the second quarter of 2019 they increased that dividend to 80 cents per share per quarter. And basically, as you can see from the previous dividend payouts, they usually increase the dividend on the second quarter or the second payout of the year. And then going into 2020, they were paying 87 cents per share. And then that second quarter was basically right at the beginning of the pandemic, so there was a lot of uncertainty. So it definitely didn't seem like the worst decision to not raise that dividend then, because there was just a lot of uncertainty there, and a lot of companies weren't sure what was going to happen in the short or long term. Just because of the pandemic. So that definitely made sense. And then going through to the end of 2020, they still did not raise the dividend at all. And if you're wondering about the dividend aristocrat streak, they still did keep that alive, because it's about the total amount that they pay in over the course of a year. So for example, in 2019 they paid 82 cents for the first quarter, and then 87 cents for the next 3 quarters. So that comes out to $3.43 in dividends. However, in 2020, they paid 87 cents each quarter, so that comes out to $3.48 in dividends that they paid in 2020. So that was still an increased amount of dividends they paid per share in 2020. So that does count as a dividend increase by the dividend aristocrat, guidelines, I guess. And then in 2021, they did not increase the dividend until this very last quarter, the fourth quarter, and they increased by just 1 cent per share, which is about a 1% increase. Basically, the minimum amount they had to basically retain the dividend aristocrat status. So there's a few things going on there that I also want to talk about, and one of those was the 401k plan that they offered to their employers. So I think it was around October 1st of 2020 last year, they basically suspended all 401k matching, and at that time they still hadn't increased the dividend. So that was definitely something that I was looking at and thinking, well, I really would not want to be a big part of this company if they're kind of sticking it to their employees while still continually paying that dividend to their shareholders. That just doesn't seem like the best thing long term for a company. And if cash is that tight, maybe they shouldn't be paying that much of a dividend. So that was definitely a little bit upsetting to me, but they actually did reinstate that 401k match basically in October of 2021, just about a month ago. So it was absent for about a year, but they did reinstate that, so that is good to see for the employees, definitely. And then just a few weeks ago they announced that dividend increase to 88 cents per share, and honestly at that point it's just kind of for show, and just to keep that status of dividend aristocrat. But it's still that small of an increase that it's not really worth much to most people. And honestly, if a company can't raise its dividend very much, they can only raise it like 1%, at that point it's really not worth it, I don't think, for them to raise it. And I really think they should be focusing on other things at that point. And we can look at some other metrics here of the dividends. Their 5-year dividend growth rate is about 3.29%, but as you can see, in 2020 they pretty much didn't raise the dividend at all, and then in 2021 it was about 1%. So that is pretty low, and especially for a company like this, I would definitely like to see a little bit more if I want to be excited about owning it. The dividend yield is around 5%, which is really healthy, but at one point they were paying close to 10%, I believe, when they were down in the $30 per share range, which is actually where I bought most of my shares. So that's how I was able to get a pretty nice profit on actually selling those shares. So I want to talk a little bit more about some of the earnings and how those compare to the dividends. So we're here on Simply Wall Street, and they have this nice graph here, which we'll get rid of this, compares the dividend per share in green here to the earnings per share. So basically, you can see in 2015, the earnings were up here around $7.50 per share, and the dividend was around $2.76 per share per year. And over the course of those 5 years, even before the pandemic, you can see the earnings, generally going down a little bit. And then obviously due to the pandemic, they had, losses, negative earnings essentially in 2020. But they just kept growing that dividend a little bit there. You can see it was pretty stagnant. But generally the point I'm trying to make is over time, the earnings, even before the pandemic, are generally decreasing. And we can look here with the revenues. This is revenues in blue here, and then the earnings are in green. And in the past, 5 years, the revenues have generally decreased a bit. They kind of sloped back up here in 2019, but generally on the decline even before COVID. And same with the earnings. Generally, they were on the decline before COVID, and not really growing that much. And if we scroll up here a little bit, these are kind of some projections as well. So we can see, from right about here to the left is, the past 2019, 2020, 2021, and then to the right are analyst estimates for the future. Basically, they see earnings and revenues growing just a little bit more over the next year, but then after that, they kind of see it pretty much being stagnant for the next year or two, and then declining just a tad bit. So, that's definitely not what you want to see. You want to see revenues and earnings growing, and definitely since, their income is negative right now over the past year. I think the last few quarters they've had positive earnings, which is definitely good to see. But that trend of negative earnings for a small period of time and generally decreasing earnings over time is definitely not good to see at all. And basically the last reason that I sold Exxon Mobil stock is because I was able to sell it for the long-term capital gains rate as opposed to the short-term. So I bought most of my shares when I transferred over from Robinhood to Fidelity about October of last year in 2020. So I sort of had bought all new shares there. So once the end of October rolled around, that was pretty much a full year. So I was able to get the long-term capital gains rate on that, which will definitely be a lot better than the short-term. And for that reason, I actually still have about maybe $7 invested in ExxonMobil actually, because those shares I bought sometime later in the year. And so those are still the short-term capital gains rate, but most likely once I've held those for a full year and those get to the long-term capital gains rate, I'll probably sell those as well just to get out of the stock. And this is by no means me saying that I think they're going to go bankrupt, that I don't think they're a good company or any of those things. They definitely seem to be moving towards greener energy a little bit slower than some of the other oil and energy companies, and that's totally okay. But for me, I just see that their dividend is not very sustainable over the next 5 to 10 years at these aggressive levels. And even if it is sustainable and they are able to continue paying it, I don't think it's healthy for the long-term future of the company, and they're definitely not going to be increasing the dividend very much, which is what I like to see out of companies that I own in my dividend portfolio. So those are the basic reasons why I sold ExxonMobil stock and sort of what I think going forward. I'd definitely like to hear some thoughts in the comments below. I know a lot of people have some varying opinions on this. Some people think it's an oil stock, so it's just the past and trash essentially at this point. And some people think that these big oil companies and energy companies still have a lot of room to grow, and there's still plenty of opportunities for them, and they just have to find them. So let me know what you think in the comments below, and thanks for watching to the end of the video. I will see you in the next one.